Hello guys, today we'll analyze one stock from pharma sector, and as you can see the name of the stock is Caplin Point Laboratories. So this stock has given 52.67% return in last 1 year. We can see its price was around 585 rupees as on August 7, 2020. The current price of the stock is around 894 rupees as on 6th of August 2021. On Friday, the stock was down by 2.15%. According to ticker tape, the current price of the stock is more than the intrinsic value, but it has given better returns than the FD. It doesn't have good dividend returns, but it is good time to consider the stock as it is not in overbought zone. There are no red flags, which means it is not in ASM or GSM list. Now the company belongs to healthcare sector, that is pharmaceuticals. It is a small cap having a market cap of rupees 6,762 crores. Stock is 2.73 times volatile as Nifty. Now the PE ratio of the stock is 27.91, but the sector PE is almost 40. So looking at the PE ratio, we can say that company is quite undervalued than the sector. But the PB ratio of the stock is 7, while sector PB ratio is 5.54. So we can say here that PB ratio of the stock is more than the sector. Also guys, please don't forget to like the video and subscribe to this YouTube channel if you think the content is useful for you. And if you want me to cover any specific stock, then please let me know in the comment section below. Now moving on. Now, if we look at the product portfolio of Caplin Point, then they have tablets, capsules, injection, ophthalmics, which are related to eye diseases, liquid oral, soft gel capsules, ointment creams, powders for injection, and dermocosmetics related to skincare, surgicals, and disposables. So we can see company has very varied type of products and diversified category. Also, it has 4,000 plus products registered. In FY 20, 25% of their product mix belong to branded generics, while 75% is of generics. Also, 60% of their product mix consists of WHO essential drug list. Now, if we look at their core business, and company focuses on tapping the untapped markets. Also, 70% of their revenue comes from distributors, 20% from pharmacy sales, and 10% from tender business. Also, the company has reached to over 23 countries. Caplin Point is the #1 Indian player in Central America, and it is one of the first few Indian companies to extend to West Africa. We can see that their revenue from Latin America and Africa is increasing with the CAGR of 29% in last 6 years, which is a very healthy rate. Company is also planning to expand to the markets of Canada, Brazil, Australia, and China. Now, this is a company which focuses a lot on research and development. We can see this graph of R&D expenditure is constantly increasing. Also, their R&D team is consistently increasing in terms of number of people. Caplin Point has the benefit of having a very experienced management team. Also, if we talk about the manufacturing capacity of the company, then 40% of their products are manufactured in in-house facilities, while 60% of their products are outsourced from other facilities in India and China. While 60% of the products are manufactured in India, rest 40% in China. If we look at the shareholding pattern, then 69% of the holdings belong to promoters and there are nil shares pledged, which is a very positive sign. Now 27.83 belongs to non-institutional investors, which also include the retail investors. Remaining 3.14 is with institutional investors. When we talk about the market opportunity of Caplin Point in US, then as of present it is around $670 million. But as per the estimations, by in the next 2 years, the market opportunity will be approx $2 billion. Now, this is a very huge opportunity for the company. It means a 3 times growth in the US market in next 2 years. When we look at the numbers posted by the company, in last 6 year revenue has increased by a CAGR of 31.3%, EBITDA by 40.5% and profit after tax by 42%. These figures are very impressive. Also, the return on equity for the company is around 28%, while return on capital employed is 36%. These are very healthy figures and shows that company is using its equity and capital in a very effective manner. The company has grown its net income by 24% in last 5 years, but in last 1 year it has grown its net income by 12.7%, which is less than the industry. Company has a strong balance sheet, plus it is consistently increasing its capex expenditure, which will prove to be very beneficial in the long term. Another very positive point about the company is that it is a net debt free company. Now it is a debt free. We can see that here the blue line is the equity portion, while this red line is the debt part. We can see that it has almost nil debt, although the current debt to equity ratio is 1.4%. So which is, this debt is very less than the cash available with the company. That is why it is net debt free company. Company can use its cash to pay off all their liabilities. Now guys, this is the chart of Caplin Point on a 1 day time frame. I can find one support for the stock at this level of 700. Earlier this level was acting as the resistance, but in the month of July stock managed to cross this resistance and it sustained at this level, and after that we can see that stock gave a very good rally for 3 or 4 days. If we carefully notice, then we can find a flag and pole pattern forming here, and we can see that stock gave a breakout from this flag and pole pattern on 5th of August. Also the volumes were very good on that day and relatively higher than the previous days. So if somebody is already invested in this stock, I think they can continue being invested if they have a point of view for a long term. And if someone is looking for a fresh entry, then either they can enter at the current level or they can wait for some correction in the stock and enter at this level of 700. So this was all from this video guys. If you think the content is useful, then please don't forget to like the video and subscribe to this YouTube channel. Thank you.